SoFi stock rallied over 10% this week, and I'll tell you why. SoFi are due to report their Q1 earnings report Monday, April 29th, so in this video I will be doing an earnings preview and what we can expect from SoFi not just in the coming week but over the next few months. This is a must-watch video if you are serious about SoFi stock. Before we get into it, if you find any value in this video, can I ask you to smash the like button? It literally costs nothing, but it helps me out so much. I'm aiming to get 400 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on new updates like this. I'm not a financial advisor. This is not financial advice, so always do your own due diligence. Now there's a lot to discuss, so let's get straight into it. First of all, let's go back to what SoFi reported in their last earnings report and the guidance that management put in place for Q1 and for the full year 2024. Management expect to deliver between 550 and 560 million in adjusted net revenue. So this would be between a 20 and 22% year-over-year increase. Adjusted EBITDA of 110 to 120 million, and finally GAAP net income of between $10 to $20. So that's for Q1 guidance. And for full year 2024 guidance, they expect to deliver the tech platform and financial services growth of 50% or more, lending segment at 92 to 95% of 2023 revenue levels, GAAP net income of between 95 and 105, with EPS of between 7 or 8 cents and 300 to 500 million of tangible book value growth. As it says here, this guidance assumes expenses under the EBITDA line to remain flat, a 50-50 revenue split between lending and the combined tech platform and financial services segment, as well as adjusted EBITDA margin ramping to 30% by year end. Now, what's interesting here is that they are expecting the lending segments to return less than 2023 levels, while the tech platform and financial services growth is set to be quite substantial. And there was detail given about this by Anthony Noto when he stated, "I want to give some high-level thoughts by segment. 2024 will be a transitional year for SoFi, as the tech platform and financial services segments together will drive our growth and increase from 38% of adjusted net revenue in 2023 to approximately 50% for all of 2024. Specifically, we expect our tech platform and financial services segments, when taken together, to grow 50% or more, with the financial services segment growing approximately 75% year over year, and the tech platform growing approximately 20% year over year. We are taking a conservative and pragmatic approach towards our lending segment revenue, given our concerns about the 2024 macro environment relates to uncertainty on rates, the economy, and industrial liquidity. Therefore, we will manage the lending segment revenues to be 92 to 95% of 2023 lending revenue. This very conservative view of lending reflects our choice to limit lending growth below both the much higher level of demand we have had and expect to continue to see in 2024 and the capacity that we have. So as it says, they are intentionally limiting growth of the lending business in periods of uncertainty while still managing overall growth. And this is largely due to what Anthony Noto had expected for 2024 at the time. As it says here, they had been expecting the economy to contract, an increase in unemployment higher than 5%, then 4 rate cuts in response to a contracting economy, higher unemployment, and deterioration and normalization in credit performance, with Fed funds rate reaching approximately 4.5% by Q4 2024. Now, what needs to be remembered here is that things have changed since the last earnings report was released. For example, I doubt that in Monday's earnings report they will still be assuming 4 rate cuts. As of last Friday, the Fed seems on track for September to start US rate cuts. After the report, futures contracts that settled to the Fed's policy rate interest rate futures prices pointed to about 60% chance of a rate cut at the US Central Bank's mid-September meeting, and traders continue to see about a 50-50 chance of a second rate cut by the end of the year. Fed policymakers meet again next week and are nearly universally expected to keep the policy rate at its current 5.25 to 5.5% range and to continue to signal no urgency on cuts, Jerome Powell said that the central bank needs more confidence that inflation is heading towards their 2% goal before cutting rates. So, with this in mind, it is extremely unlikely that we will see the bearish outlook that SoFi had projected 3 months ago. Now, in terms of what I expect on Monday, so new member additions had increased every single quarter since the company first went public, with Q4 seeing over 7.5 million members. Now, I expect this figure to come in at just about 8.1 million for Q1. 8.1 million members would be an increase of 800,000, which would be one of SoFi's best ever quarters for new members, but at the same time, this would be a 43% year over year growth rate. This is what I'm expecting, and this would also be the worst percentage growth in 4 years, but it would be in line with the trend for such growth. Similar to for new product additions, I'm expecting SoFi to again break records in terms of actual numbers. I expect this to jump to about 12,000 new product additions, which again would be record breaking. It would be a massive increase number wise. Percentage wise, it would be just about 40%, which would be again in line with the growth trend. In terms of the lending product, I expect a moderate increase to about 1.7 million, while I expect the financial services products to increase by about 40%, going over 10 million for the very first time. Now, that is my expectation, but the most important metrics that SoFi will be judged on Monday is going to be the revenue and the EPS. Now, every quarter so far, SoFi has beat analyst expectations on both revenue and EPS. Like we can see here, going back to March 23, they expected -9 cents and reported -4 cents. In June, they expected -7 and reported -6. And of course, in December 23, SoFi finally turned profitable and reported a positive 4 cents. So before I make my projections, let me know your thoughts in the comments below. How will SoFi's earnings reports go? Will they beat on revenue? Do you think that they will beat on EPS, or do you think that they will beat on both? Or could this be the time that SoFi will actually fail to beat expectations? Drop a comment below. Let me know your opinion over the weekend, and we'll take a look at the results on Monday. So the current analyst expectation is that SoFi will report revenue of 559 million with an EPS of 0.00. So straight away, I think that this will be easily beat. Revenue of 559 would actually be lower than what was reported in the last earnings. So with all of the metrics being on the increase, it is unlikely that revenue would fall. Secondly, management have guided for between 550 and 560 million. But SoFi have always exceeded their own expectations, so I don't see any reason why that won't happen again. Regarding the EPS, the expected is 0.00. Now, I expect SoFi will beat this too, and I'm expecting between 1 cent and 2 cents. Now, this would be lower than last quarter's EPS, but there are other factors that need to be considered that do affect this. This would still be the second best EPS in the company's history and only the second positive EPS. Given that the expected EPS is 0.0, any earnings beat will look amazing percentage-wise. So I expect a massive day on Monday. Depending on how the earnings go and how far above the projections that they achieve, trading volume should be insane for the entire day and probably all week. Now, for anyone who has been following this channel over the past few months, we made a killing on the last earnings report, with gains of over 100% in just one day. And again last week, massive gains. So I'm not quite expecting the same again next week, but there is still opportunities. In my opinion, there's a lot to be bullish about in both the short term and the long term for SoFi investors, especially in the long term. This is, of course, just my opinion, and it is not financial advice. Now, there is a lot of talk on social media about SoFi and a lot of stuff that isn't quite accurate. So always do your own due diligence. Remember that I'm not a financial advisor, so don't take this as financial advice. But if you do enjoy this analysis, then please like and subscribe. I hope you make a load of money on this stock. Follow me on Twitter, and I'll catch